the other key element of student accommodation in South Africa is that there's a great demand, there's a great need for affordable student accommodation. And we all know that a business will thrive if there is a lot of demand. If you invest in an area where there's tons of tenants and people want to live there, you're going to find tenants easily, and that's because there's a great demand for rentals in that area. And right now in the South African market, there is a need for student accommodation. Obviously, COVID has sidelined that slightly, as more people are working from home and studying from home. But the reality is that there's still a massive shortage in beds. And as this COVID vaccine rolls out and, we kind of become immune, life's going to return back to normal. And that need for students is going to come back. Here's just some stats. Basically, the Department of Education has acknowledged that there's at least 300,000 beds required to accommodate the nation's students. Which is quite a large number. Obviously, there are certain areas that are more densely requiring. Like your Joburg, your Wits, your UJ, your Cape Town, KZN market. Those tend to be very popular for students. But Bloemfontein, Potch, as Masego will also share with you, are also strong markets where there is a strong demand. And in terms of what we're looking for from a property perspective, especially when you're looking at the buy and hold, the rental market, is it must make positive cash flow. And I think that's why a lot of people are attracted to student accommodation as well, because you tend to have a positive cash flow situation. If you're not sure what that term is, simply put, a cash flow positive property is one where the income is higher than the monthly expenses, leaving you with a profit, what we sometimes refer to as positive cash flow. So your rent, your parking, your ads, your storage, any kind of rental or income that your house can generate, minus the expenses, the levies, the bonds, the rates, the water, the insurance and provisions, gives you your profit. The same with a negative cash flow, except your rent or your income is less than your expenses, leaving you with a negative or loss cash flow. Most people are used to this being the situation with property, especially if you buy in the suburbs. But if you go for your multi-lets and your student accommodation, you can find deals that are cash flow positive from day one. As I mentioned, there are two guest speakers on tonight, two of my coaching students who are in the student accommodation market and have recently done a deal, and they're going to come and share their story with you. We're going to look at a deal in Brixton, Gauteng, in Observatory, Western Cape, and then in Potchefstroom, in the Northwest. So please do make an effort to go to Exclusive Books and go pick up my copy of my latest book, Millionaire in the Making, which talks a lot about property investing and how to build a generational wealth through property investing. The agenda for tonight, I'm going to take you through about a 10 to 15 minute educational on how you can find, analyze, and finance student deals. Then we're going to have Lushiah come on, and she's going to share how she made 60% return on her first student accommodation deal, which is fantastic. And then we're going to have Dr. Masego come on, and he's going to share how he got 100% loan to value on his the first time he's gotten 100%. He's gotten loans before, but he's at that position now where the bank sees him as a credible investor. And we're going to be looking at deals in Cape Town, Jozi, Northwest. So, exciting times. Let's look at this first piece, which is how can one find, analyze, and finance a student deal. These are the three key steps that you and what Masego and what Lushiah have done so well is they've gone out into the market, they've found a good deal, they've analyzed it using algorithms and mathematics that gives them confidence, and then based on that they're able to finance, leverage through the bank because it is an asset in the bank's eyes. The first thing we need to do is find your area. I tend, because I'm living currently in Cape Town, and probably the only cash flow strategy that will work is student accommodation. I did a comparison of two areas. So I looked at Stellenbosch, very common and very popular student accommodation area, and using a very simple calculation called the gross yield, or sometimes called the effective yield, you can determine if an area is going to make financial sense from a rental perspective or not. So here you can see that the rent that this specific unit or this house is generating for student accommodation is 34,000. I times that by 10, which is the number of months that a student usually stays in accommodation. They don't usually stay over November and December. That's when they go home. So that's why you can only work on a 10-month period. Times 10, so get your annual revenue divided by the asking price of 3.2, gives you a gross yield of 10%. And what I always tell my students is anything below 15 is probably not going to cash flow positively. So very quickly, I can see that, yeah, there are pockets in Stellenbosch where student accommodation will work, but the prices of the properties are slightly too high for the rent that is generating. Another very common or popular area in Cape Town for student accommodation is Woodstock. And here's an example of another sort of block of flats with multiple students. And here the effective yield, sorry, I made a mistake here. It's 50,000, not supposed to be 48. Anyway, it's giving you a yield of 24%. This is obviously based on a purchase price of 2.5 million, not of the 4 million. So it's obviously not going to make sense at 4 million, but if I can sneak this purchase at 2.5, that'll be my effective yield. So that's why I'll look at a lot of different areas and I'll do a quick gross yield analysis and I'll say, okay, cool. If we look at Brixton, Vredendorp, and Hurst Hill, those are common areas in Johannesburg. Let's find out what the effective yield is based on the average purchase price, average rental, and whichever one's got a higher one or at least a 15% plus gives us confidence that we found a good area to start looking for. Now, once you've found your area, you commit more time and resources to that area. I had a look at Stellenbosch a little bit more, and I found this deal, which I think, on the surface makes a lot of financial sense. It's already catered for students. You can see there's beds, there's student furniture, common areas, a pool. That pool needs a bit of work. I love seeing a green pool because that's obviously a sign that it's not being managed very well and maybe a bit motivated. In terms of analyzing the deal, this is where the maths comes in. So you got to work out what the rent would be minus all the expenses. So here a bond of 14, rates and taxes, insurance, water, electricity, maintenance, right? The students are going to break things every now and again. You're going to need to replace locks and repaint, and there's going to be small damages that you'll need to repair. And then also vacancy. So those tenants aren't usually going to rent for November and December, which means unless you're doing an Airbnb, that you're probably not going to be generating revenue on those 2 months. So you have to put some provisions aside for that to make sure that during the dry and the lean months, you've got some saved capital. And then management, obviously we want someone with expertise to be able to market for students, vet the students, make sure that they are credible, manage any kind of eviction or maintenance that might arise. Because for me personally, why I like the buy and hold strategy is that it's very passive. I'm a full-time employee in IT, but I get to run this property business on the side because it's just constantly being managed by somebody else. Leaving you with a profit here of 7,100, which seems quite promising. You obviously want to work out your return on investment to get confidence on if it's a good deal. And the final step is finance, which probably the best, cheapest, and easiest finance you're going to get is bank finance, with one caveat: you have to be employed and you have to have a good credit score. Those are the two key things that the bank are going to look at when considering to give you a loan. They'll also look at the property, of course, but the key thing that they're looking at is they're looking at you as the investor and asking the question, are you credible? And I think Dr. Masego's story is so compelling here because he's done several deals and he's gotten decent financing rates. But now that he's proven himself as a credible investor, the bank sees him as low risk. They've now offered him 100% loan to value on a relatively large deal. So it's very exciting for me to see how he's building his credibility. And that's what you need to do. You need to have a strong salary, or not necessarily a strong salary, but you do need to have a salary. You do need to be employed, and you need to have a good credit score. And when we're thinking about debt, I know a lot of people, they think of debt and they think of a negative thing. They think of credit card debt and they think of high interest rates. But I believe there's such a thing as good debt. Now, here we've got 3 examples of debt. On the right here, credit card debt. This, in my view, is ugly debt. That's debt you don't want to take. And if you need to take it for whatever reason, it's short-term debt. This is where you maybe pay your groceries for 1 month, and then at the end of the month, you repay your credit card. You don't want to have this kind of debt. Then you've got what I consider bad debt. This is when you buy, for instance, a car, and this car is draining money from you. So it's not like you're renting the car out or making any money off the car, but you have to pay the mortgage on the car. You have to pay your insurance and your petrol. So if you need to get a loan on a car, it's bad debt because you don't have an asset generating income to be able to cover that debt. And then you've got property, which I see as a good debt example, especially if your rent is greater than your expenses, because then you're not paying the debt. Your tenants are paying the debt. You've got your good debt, you've got your bad debt, debt that you want to try and avoid, but sometimes you have to. And then you've got ugly debt, credit card debt. When you're using your credit card to buy to travel overseas or to buy nice clothes, that's an example of poor usage of your financial resources. But to use your debt and your affordability to buy property is a great way to increase your generational wealth. Our lending criteria for student housing, I have touched on this, but mainly credit score. Go check out a tool called clearscore.com. It's free. It tells you your credit score and it tells you practical ways on how you can improve it. You need to make sure that this is in line. And then affordability. They're going to look at your salary and they're going to give you a percentage, or they're going to give you some sort of uh, capacity or facility within their lending system based on how much you can afford with your salary. I usually use Property 24. It's very easy to determine your affordability. So I'll quickly show you. Here you go under calculators, affordability calculator. So here you can say if you're earning, let's say 25,000 Rand gross, you've got 20,000 as your net and your expenses are 10,000. It basically means that here you could qualify for just under R1 million loan. So if this is your income, if you make 25 gross with 20 net and 10 expenses, you could probably apply for R1 million loan and have a good chance of getting it. Okay. Now, types of income, they mostly look at full-time employee, your salary. They'll look at that as an income. They might also look at you as a self-employed individual if you've got some sort of track history. They'll look at commission they'll look at the rental income that it provides. Here you can see Absa Bank will look at 80% of the rental income and add that to your affordability. So there are some ways in which you can increase your affordability. Guys, that was a little quick educational, how to find, analyze, and finance a deal. So let's have a look here. May you please outline the future of university accommodation with regards to COVID-19 and online learning, which is likely going to shape over the years? I think you're 100% right. I think online learning is going to become a much more important facet. In terms of how that's going to affect the market, I think the houses that provide the best Wi-Fi, or maybe put a little bit more money into securing a good internet connection to the student accommodation, who's going to win. The reality is students still want to have that experience. They want to have the chias. They want to have, they want to be able to be close to the nightclubs and close to their other friends. So I don't think that there's going to be a massive decrease in the amount of students looking for accommodation. I just think it's going to be more important that the Wi-Fi connection is stable than anything else, because online learning is becoming a trend. Okay, one more question and then we're going to hand over. Hi, I've identified a property with existing student tenants, but as a first timer, how do I get financing for such a property? The ROI is just above 12% with 400 beds and an asking price of upper 50 million. Okay, so I am going to let Masego maybe touch on this when he does his slides, but as a starting investor, it's going to be hard for you to convince the bank of a property of that size. I think, someone like Masego, who's got several investments already and a trading history, he might be able to convince the bank to give him such a size loan. But if this is your first time investing, I would say to get that kind of amount, you'd have to go private. I don't think, from my understanding, the banks aren't going to touch a first time investor with such a large deal. So I think Tebogo on that point, maybe it's about trying to raise private finance or partnering with an experienced investor like Masego who could potentially raise that finance. Okay, now over to this lovely lady over here, Lushiah Buthelezi. Could you
Hi
speak now?
everyone. Yeah, my name is Lushiah Buthelezi, originally from KwaZulu Natal, but based in Joburg due to work. By profession, I am an IT head of IT in one of the big banks. So that's my 8 to 5 basically. And obviously, I'm also a property investor. I'm focusing on these two strategies for now. As I'm just starting off, multi-lets, which is your student accommodation, as well as your back rooms. I will tell you a bit of a story about the back rooms later on when I touch on the properties that I bought. Okay, interesting thing about me, I am a mother of three very inquisitive kids. I mean, I've resorted to actually buying them Google to ask all their questions because I just can't keep up anymore. So
Yeah.
yeah, they kept me busy. Yeah, so that's me in a nutshell. Cool. And then my journey when it comes to property, I must say that I think I've always been passionate about property. When I started, obviously, I started many years ago. I bought two properties. One of them was for me to live in, and the other was for rental. And they were both cash flow negative. And this was because obviously when I started just buying these properties, I didn't know the definition of what an asset is because I was told that I'm buying an asset when I'm buying property, not knowing that the true definition of asset is actually something that gives you money, not that takes away money. So I bought these properties thinking I'm doing the right thing. That was before I actually had the knowledge of how to, use property and get positive cash flow deals and all of that. So yeah, so that's how it began. Then obviously later on, which is 2020 now, I started doing some research, and I think I attended one of these webinars with Lawrence, and that's where I learned a lot of things about what is positive cash flow. How do you do that within the property, and why is important to have a cash flow positive property. So now my main focus is finding deals that cash flow positive. So started with a student accommodation that I found in Soweto. It was a very good deal, but obviously I was very hesitant because I was not sure of what I'm doing. I mean, the property was about 1.5 million, and I thought I'm not there yet. I mean, the properties that I used to purchase was like 500,000, 700,000, but as soon as I saw like a whole lot of zeros, it sort of like scared me. Luckily, I had a coach, which was Lawrence, who walked me through it. But I mean, the hesitation was still there, and the deal was taken by someone else. So again, the lessons learned is that if you've got a good deal, you've done your deal analysis, you've confirmed with your coach if you've got someone who's coaching you, don't spend too much time rethinking about it. You have to commit because someone else will take that deal. So at the moment, I am working on the deal, which is in Brixton. So that's my second deal that I found after the Soweto deal that I'm going to take you through a bit later. Cool. And the deal that I'm working on at the moment, so it's a deal in Brixton, student accommodation, NSFAS accredited for 9 students. At the moment, it's
Sorry,
fully lit.
can you maybe just explain for those who might not know what NSFAS is?
NSFAS is the, what do you call it, student funding that is actually given to students by government. So basically, how it works with property or with student accommodation is that you are actually paid by NSFAS, not the actual students. So the funder of that particular student is almost like a government scheme for the students.
Sure, and you have to meet certain criteria, which you've made a subject condition on your OTP that the current landlord has to do that. But you have to meet certain criteria, and then you get checked off, and you become a registered landlord with NSFAS, and they will send you students. That's correct, eh?
Yes, so you would have to, as mentioned with UJ, they have their own criteria. So you'd have to send plans. I think there's a whole lot of a long list of what they require. They will check that and then they'll verify with the property. And then once obviously you pass that, they can actually fully register you as accredited. Then from there, you don't even have to look for the students. They would give you the students.
Yes.
That would have to, yeah.
So it
Go
looks
so
like it's currently being used as student accommodation. Is that correct, or is it being used as a home?
It's actually a full student accommodation. The students, I went to see it. The student, it's fully let. It's got beds, everything that a student needs. So it is fully functional as a student
And
accommodation at
fully
the
let
moment.
during COVID. I mean, that's quite phenomenal.
Yeah. So, I mean, I did interact with some of the students. So they said obviously the conditions at home are not feasible for them to study. So
Yeah.
they do need accommodation. Yeah.
Cool. Well, take us through the numbers then.
Okay, cool. So this deal that I found, so the asking price was at 1.85 million, offered 1.7. I started with 1.6, it was rejected. Then I had to go up at 1.7. Again, what was important for me looking at the numbers, because if also you go a bit too low, you stand the chance of losing a good deal. So if the numbers make sense, then you have to go for that for the deal. So I offered
Yeah, so that's a
1.7.
really good point, Lucia. That's, the best offer you can ever get is 100% discount, but you're never going to get that. So it's about balancing. Yes, you want to get a good deal and you want to get a good discount, but if the return makes sense at a certain price, you also can just commit and pay a little bit more.
Yeah, yeah. So, for instance, this one for me, I got a little bit under 10% discount, but the numbers were still making sense. So, with finance, as Lawrence has mentioned, that obviously using the bank, one of the banks gave me 90%, which means I need to get 10% deposit in. And then in terms of the income, because we're looking at NSFAS students, it's 43,000 a month. And that I've also included. I mean, when I purchased this property, it was more about also the opportunity that I saw, because I mean, there's extra room where I can actually fit in cash students. Hence, my income is a bit higher. And then in terms of expenses, I think Lawrence would have taken us through the, what you have to take into consideration, your water, your electricity, your maintenance, and all of that. So that works out to be about 35,000 a month. And then cash flow positive at about a minimum of 8,000.
How does it feel, Lucia? That's amazing.
It actually feels amazing because as you would know, I've had so much anxiety with starting my journey, because again the numbers are very scary when you're looking at those big numbers. 1.5 might not be a big number, but when you start, it actually feels like probably I'm going to lose my life, So I mean, having you as a coach, I think for me it has really helped me to settle and be confident in terms of what I'm doing. And I'm really excited to go forward with my journey, because this is just the
Awesome.
beginning.
That's brilliant. I'm so proud of you, man. Let's answer a couple of questions if you don't mind, Lucia. And for those of you guys who don't know, Lucia is still quite new in the property game. She's been investing for a few years now, so she doesn't know a question or prefers that I answer it. That's also fine. So one question here is Umpo asking what locations in Johannesburg are feasible for student accommodation. So I don't know, Lucia, if you want to maybe give a couple of areas that you think, based on your experience and your research, looks good.
Yeah, so definitely Brixton, and there's a lot of property there when you look at Brixton, because that whole area is literally student accommodation. So there's Brixton, there's it's called Fred and Dop. They are all close together, so you're mostly likely to find positive cash flow student accommodation within those areas.
Mm.
Um, I recently discovered Soweto. So I think also if the numbers make sense, there might be a good opportunity there. But it was my first deal that I actually found in Soweto. I didn't know that there could be such in Soweto around about the UJ.
Yeah. Yeah. Okay, cool. I might just add to that that you want to look at Auckland Park. um,
Yeah.
West Dean. Sorry, Lushiah, I think if you could go on mute for a second. I hope we're going to get your speech together. Auckland Park, West Dean, Hurst Hill, Dorp. Those are really good areas for student accommodation. If you go into your Pretoria market, it's more your Hatfield, Pretoria CBD, Sunnyside, Arcadia. That's where you can find sort of your student deals. So I would say, what locations in Johannesburg, or what locations is anything within sort of accessibility to the university, within a 3 to 5
Mm.
kilometer radius is what you're looking at. Here's a good question from Felicia. How did you find this property, Lucia?
Okay, how I found this property is that I've established relationship with agents, but I'm totally active on Property 24, looking at deals. But the deal that I'm currently working on, it's the lady, an agent who's been sending me deals because I told her that I'm in the property market and I'm looking for such and such, and then she found a student accommodation that has if almost everything that I required, like it must be NSFAS accredited, all those things. And then she sent the deal to me, and yeah, that's how I found the
So
deal.
through
But
building
probably,
relationships,
yeah,
that's how you find the good deals. Good point. One
yeah.
more question for you from Rafilwe. Is it a good idea to buy as a group of people and share the bond, or to go solo and do it yourself?
I think that would be a yes and a no. When I started the journey, because I wanted to learn by myself, I decided that I'm going to do this by myself. But going forward, I'm looking into getting into relationships with other people because it's the only way you can grow with property because it does require, um, capital at some point, and also uh, with me being by myself doing it, I think probably I will run out of, what we call
Capital,
it.
yeah.
Yeah,
I think that's
capital.
very good. You want to start on
Yeah.
your own to learn your stripes, but leverage is going to come using other people's money, and
Yes.
by growing your network like that, you're able to. Because the reality is, as much as other people like to tell us otherwise, you need money to invest in property. You
Mm.
can't. It's hard to do a no money down deal. It's very difficult. So you need
Yeah.
some capital. It just doesn't have to always be your capital.
Yeah, and to add on that, I think learning by yourself is important so that even if you have others, you know exactly what to look for, what to do, and what not to
100%.
do, because they might not have the knowledge that you have. So you probably need to be aware of because you might take a deal that doesn't make sense because all of you haven't learned. But if you know that you've learned by yourself, you've got the knowledge, then you can
Yeah.
lead your team also. Yeah.
Awesome. Lucia, thanks so much. I'm going to put you on mute for a sec because we've got Baba on his turn now. So let me go ahead and share my screen again. We are going to try Masejo's audio. I do hope that it works out. Masejo, do you want to go off mute and let's see how it goes?
Right. Yeah, I'm an orthopedic surgeon by profession, based in Clarkston. I'm a founder and a director of a company called Property Investments, and this is basically the vehicle that we use to buy properties. And we mainly specialize with student accommodation in Potchefstroom. Other than that, I'm a hubby, a beautiful wife, and 3 kids. Lawrence is my mentor or a coach. It's a good thing to have a mentor because whenever you get stuck, you can just give him a call or just send him a text and he sorts out all your problems. We have 5 properties in Potch, with 80 students. Why am I in property? Basically, with the work that I do, it gets so busy. I don't get enough time to spend with the girls, So property, basically, I want to generate passive income. I want to create generational wealth for the girls and basically have financial freedom, so I can live life on my own terms. Also, when I go chill at the beach in Cape Town, I still get paid for just chilling, And the strategies that we do basically is student housing mainly. We also do multi-lets residential, And recently we've started with property development as well. So just to show you some of the deals that we did, like I said, we mainly do student accommodation in Porch. So what we do is, we buy properties that are less than a kilometer from the University of the Northwest. So we have 5 of these properties in Porch with a total of 80 tenants. So your location is very key. Location. And basically what you need to do, or what you need to know about students in terms of satisfying them, it's just a few things, really, to make these guys happy. Wi-Fi is the number one. I give them uncapped, unlimited Wi-Fi. They're happy with your Wi-Fi. They can forgive you if you do anything else wrong, but just don't mess up their Wi-Fi. And like I said, proximity to campus is very key. So we do less than a kilometer to either the university or the colleges. So these guys, they need security, and how you can improve security, just you can use biometric access control gates, use surveillance cameras, electric gates, or electric fans, and basically just make them comfortable, because basically it's their home away from. So this is the deal that we did this year, I think about 2 months ago. It's 20 bachelor apartments, 800 meters from the Northwest University. Motivated seller, the guy needed cash to buy other things. Property was in a great condition, or is in a great condition. There's no rehabs or refurbs that needs to be done. Electric gate, camera, is NSFAS accredited for 20 students, and it has occupancy of 90%. There's just some of the pictures they're showing. It's a beautiful property. Nothing needs to be done here. It's got everything you need for the students. Running the numbers, our income here, 20 students paying 3,000 rent a month each. Expense there, 41,000. So it's positive flowing at 8,424. The return on investment of 67%. So this is quite a good deal. So what we focus on here is positive cash flowing properties. That's what we deal with. Nothing negative cash flowing, or we don't want to break it. We want to make money. So we use the bond originator that secured us 100% loan at 7% interest rate at 20-year terms. It's very important to use these bond originators because they negotiate on your behalf. They submit your application to all the major financial institutions, basically get you the best deal. That's how we managed to get 100% loan at 7%. So the main advice here that I can give the guys that are upcoming or starting, is that your network determines your net worth. So check who's in your circle. Invest in yourself as much as you possibly can. Attend seminars, read books, get yourself a coach. Another thing is you make money when you buy. They say if your offer doesn't embarrass you yourself, then it's not low enough. So make a very low offer and see how it goes. You'll be surprised. Cash flow is king. Make sure that your properties are positive cash flow. I don't do anything that's negative cash flow.
Masego, thank you, Baba. It was great for you to share your knowledge, and also that it's possible to get 100% finance. Let's answer some questions. Okay, so here's a question from Rudo that I'd like you to answer, Masego. His question is, when you're financing a student accommodation house, do you get finance for the house at a residential rate, or do you get a commercial rate?
I got commercial rates for this one.
Which can you maybe just explain the difference between commercial and residential?
It depends on your zoning. This one is zoned for residential. The other ones, I've got a commune as well. It's a residential one. So if it's a residential one, that's just your normal house that you can turn into student accommodation. Then that can be financed as just a home loan, a normal home loan.
Fantastic.
But commercial, um, the other thing, the other important thing about commercial is most of the banks actually go for 60% on commercial. So this one, I was also surprised to get 100%.
Sure, sure. Is it the first time you got 100%? If I'm not mistaken.
Very first time, my man.
Okay.
Very first time.
Okay, let's see if there's another question here. Okay, great question. Where did you find the student accommodation deal? How did you locate it?
Well, I have a strong relationship with my estate agent. This guy, I bought 2 properties from him, or I got 2 properties through him. So he sent me a text and said to me, "Hey man, there's a distressed seller. Send me some pictures. Are you keen?" And I went to view the place and I loved
So
it.
again, the same thing as Lushiah, that it's hard to find a good agent, but once you've done 1 or 2 deals with them, they tend to have you in their corner and will give you the off-market deals.
Exactly. Exactly. And he did the same thing last night. It
Oh,
might be
really?
another deal loading. Yeah. So once you start and they see that you're a serious investor, they keep
Yes.
coming back.
Yes.
You
Okay.
know.
Last question here for you, Masego. There have been some reports or some people that have said NASFAS sometimes takes a while to pay. So the start of the year is, let's say, January,
Let's see.
February, but you
Yeah.
only get paid your NASFA's, your first month's rent in like April, May. So the question is twofold. One, is that something you've
True.
experienced? And then number two, how do you mitigate that to protect yourself in the future?
Look, you know this in advance. And I've been fortunate that I'm working with the University of the Northwest. They tell you in advance. They send you an email and said, "Hey, the first payment will be this year was I think May, either May or end of April." So they send you an email in January already, so you can plan your things prior. Hence I'm saying cash flow is king. So with my other properties, I can already budget for the students where I expect that no, the payments will only come in later. And then once they start paying, then it becomes consistent. They pay in May or they pay in April the first time, then they pay every second
Gotcha.
month after that. So you've got time to prepare yourself financially.
Well, it seems like your audio all of a sudden is fixed, which is great.
I'm
Yeah. So
surprised.
thanks, man. I'm going to do one more section. Will you stay on for a little bit longer in case at the end there's some more, final questions? But thanks again for being here.
Yeah, sure. Okay.
Okay, so time to share my screen, and I'm going to end with a little deal that I've done now here in Cape Town. So we've seen a Josie deal through Lushiah, we've seen a Northwest deal with Dr Masego, and now we're going to look at a little Cape Town deal. And I'm just going to show you how we found the deal, how we analyzed it, and how we financed it. So finding this deal was through Property 24. I would say that either Property 24, estate agents, or sourcing agents that's where all of my deals come from. Some people go to auction. Some people, use flyers. Some people do digital or online marketing to find distressed sellers. For me, it's Property 24 and agents, really. Now, this property is in Observatory, a very, very popular destination for student accommodation for UCT. The purchase price on this one, 1.6. So you can see the asking is 1.75, and we purchased it for 1.6. That's not a huge discount. Usually when I'm working with my students, I'll say, you want to try go for 10, even 20% discounts. But to Lucia's point, if the deal makes sense and you know that the owner is not going to budge lower, it's okay to also offer sometimes a bit more than a 20% discount. It's currently catering for 14 students, which is not right. It's completely overcrowded. So we'll have to, once we take ownership, we're going to remove some of the beds and make it more towards 8 to 10 students, and then we'll get the NSFAS accreditation. And based on 8 students, the return is 23%. We've also gained equity of 300,000 off this purchase, which I will show you shortly. Here are some inside photos. You can see on the top left here, there's a bunk bed above a desk. And here's a double bunk bed. Here's the kitchen on the top right. You can see at the bottom right here that there's a lot. They are being clever with the space in terms of maximizing the amount of students in the area. But if NSFAS comes here and they see 3-4 people in a small room, they're going to have an issue with that. The middle photo here is a corridor with a little lounge. We're going to put a TV up here so that they've got an area to chill. And then at the back of the unit, there's also a little Wendy house and a small little bathroom. In terms of analyzing the deal, we went through several scenarios. That's very important to look at your different ways things could play out. So what you can see here is as is. So with 14 students, the annual cash flow will be 32,000 with a return of 23%, which is decent. If we changed it to 10 students and we took away the managing agent, the return would be minus 1%. If we turn it into 8 students and we charge a little bit more because we're creating a better situation for the students. So we take away the overcrowding, we put some more luxurious or maybe higher finishes, and we can charge to cash students who, maybe their parents are willing to fund that. We're looking at about a 10% return. And then what we're going to do is the months that students don't rent, we're going to Airbnb. And that's where we get to this 19% return. So we've essentially looked at, I think we actually looked at about 8 or 9 different scenarios. And we just looked at where does our risk lie? Are we potentially going to lose money with one strategy? Where's our most lucrative strategy that we want to look at? And really what we want to get to is 8 students with Airbnb averaging a 20% return, which I think is pretty good. In terms of finance, we followed Masego's advice. We went to a bond originator. They came back with 2 offers, one from FNB, one from Standard Bank. Here is, I think we ended up going with, I can't remember now, Standard Bank or FNB, one of the 2. But we got 100% finance. So here 1.6 was the principal debt that we were being offered. What's also interesting is here, future use amount. So after 6 months of owning the bond, we can access a further 324,000 Rand. So essentially what the bank said is they value the property at 1.7, or they value the property, at 2 million, at 324,000 more than we valued it at. And what they're saying is after 6 months of paying your bond, we can give you access to that. So we could pull that 300,000 Rand out and basically have no capital in the deal and to some extent be paid for the deal, which is quite crazy. And we got 7% lending. And when I say we, it's me and 3 partners of mine. So it's 3 young professionals and myself. We, we've met each other through my webinars and stuff, and we all put about 80,000 Rand in. So 80,000 split 4 ways. That gave us I think our total buy-in was like 300 or something like that. So 4 of us, we've all got good jobs, credit scores. We applied for the home loan together in the capacity of the 4 of us, and split our risk across those 3 areas. So pretty cool. There is going to be some renovation required and quite a bit of work to get it up to scratch. But that's how we found, analyzed, and financed a student accommodation deal. And the reality is, guys, it's easier than one thinks. You just have to take the advice that Lushiah said, and you have to commit. You have to take action. You can analyze the deals until you're pink in the face. You can try and negotiate to 100% discount, but at some point you also just have to take action and figure out a way to make it work. For those who are interested in our bootcamp membership, just some of the benefits: you do get access to a bunch of our templates. So you'll get shareholders agreements, loan agreements, OTP agreements, checklists, deal analysis tools. So a whole bunch of different templates that you can use. I mean, I've spent thousands of rands on the shareholders agreement, for instance, and you can get it for next to nothing. There's also a private forum. You get to join our WhatsApp group, ask questions, and join our network of investors. This is just one of the messages that was sent last week. And I just share some of my Power Team members and some of my advice on this group. You also get access to advanced online content, things like running the numbers, how to raise finance, all of that stuff. And yeah, it's pretty cheap, 100 to 200 Rand per month for access to this membership, or a once-off 5,000 Rand payment, and you have lifetime access forever. You can go onto my website, lawrencebull.com, and book a little intro session with me, and I'll take you through my program and see if it's the right fit. Let's go to the last few questions. I'm going to unmute you, and I'm going to unmute Lushiah. Let's just see. I hope that it's going to work. Okay. So let's see. A quick question here, maybe for let's go with Masego. How much should one spend on renovations, Masego?
It depends on the individual, because you have to calculate all this before you buy, you know. So it goes into your due diligence, you know. So there's no straightforward answer as to how much you want to spend, you know. It's up to your appetite, you know. If you want to go big, and if it makes sense with your due diligence, then yeah. So it's all about.
There's not just one number. It needs to be done on a case-by-case basis. I think the best advice is you need to get a building inspector or some sort of contractor who has experience to come with you to the viewing and to give you a sense of what needs to be fixed. And then, as Masego said, you can prioritize and say, you know what, we only have a budget to fix this, this, and this. The rest, you know, they must just deal with.
Exactly.
Awesome. So I think that answers the renovation questions. Let's see here. If you come across a rundown property that's in a good area, what's the best way to approach it? So she's speaking about there's a specific area in Fairways in Cape Town that's working, that she's looking at. So that's a good question. You know, if you see a distressed building or a distressed house, Masego, what's your approach when you're thinking about buying that?
It depends on your strategy. Are you going to flip this property or what? You know, so if it's a rundown building, I'm guessing you want to flip it. You want to just renovate it and put it back on the market and sell it and get some profit out of it. You know, sometimes you can even decide if the numbers make sense to just keep it and
I think the key thing about why I like a rundown property is there's a level of motivation that aligns to a potential discount. You know, a property in a good area that's not run down, there's probably going to be very little motivation for a seller to take a cheeky offer, versus a rundown property where maybe it's lacking maintenance and, you know, you can't put tenants in there because it's in poor condition. That person might be more susceptible to a low offer. Would you agree, Masego?
Yeah, true.
Cool. Here's a quick question for Lushiah. So this is from Tumeleng. What's the best way to increase your cash flow on a student accommodation property? And she recommends here, or she asks, would a self-paying washing machine work? So 2 questions. What is ways to increase your cash flow? And 2, you know, would you put a self-paying washing machine in?
Okay, I think that's a very good question. So one way is when I look at my student accommodation that I've purchased, as I mentioned, that I looked at the opportunities beyond what it has. So one of the ways you could look at the rooms, if the rooms are big enough, you could divide that and make more rooms. There's usually also a caretaker. There is, you know, a room that is at the back. You can decide if you could actually put in more students in there, and also looking at the land itself, if there is opportunity for you to actually put in more rooms in that student accommodation. So that for me, those are the things that I looked at when I was purchasing this property, because it has potential. So
Sorry, go for it.
You can go first, because I was going to jump into the next question. Yeah.
Sure. So I think the key thing is if you want to increase your cash flow, you either have to increase your rent or decrease your expenses. You increase your rent by putting in more students, some of the advice that Lushiah gave, or you can reduce your expenses. So you can put some electrical meters or water meters in place, restrict the usage of the expenses. So you either reducing your expenses or increasing your revenue to increase your cash flow. The second question, would you put a self-paying or a prepaid washing machine in your building?
You could, but I think that would disadvantage you depending on what other student accommodations are doing around you. Because remember, if then there's students who are staying next door, and washing machine is actually part of the accommodation, while in the other student accommodation I have to pay for the washing machine. So I think that would actually work on more on the multi let, but the residential, because then you're adding value to that property with your residents.
Sure. Good question. Good answer. Let's see here. Okay, so question. Did I hear you right that a discount can be negotiated up to 20%? So, Masego, I'm going to ask you to give your opinion on this as well. But getting a 20% discount is not only possible; it's definitely, it's almost probable with the COVID situation that we're experiencing. And to give you a little bit of context, not the student deal, but the other multi-lets that I've done this year were all bought at 25 to 30% discount. So, Masego, being experienced in this market, have you found that 20% negotiation is on the table, or what number do you usually work on?
Is this discount for the tenants?
No, discount on asking. So discount on the purchase price.
Man, you can even go higher. I mean, there's a deal that I did in 2018. It was also a distressed seller, divorce case. The property was on the market for 1.8, and I got it for 1.1. So it's very possible. Hence I
find
said,
the right person at the right time, hey?
Exactly. Hence I said, if your offer doesn't embarrass you, then it's not low enough. Yeah.
Good one. Okay. Let's see. There are a couple of questions about, is this going to be recorded? Yes, it is going to be recorded, and it will be on YouTube after this. Okay, here's a question for Lushiah. This is a bit of a tough one. The question is this possible if I am unemployed? Being in the banking industry and knowing what you know, Lushiah, do you think it's possible to become a property investor without employment?
Yeah, that's a difficult one, because obviously, if depending on where you want to get the finance, if you want to go get the finance from the bank, it's going to be very tough, because it's either they want a pay slip or they want the financials of your company. And if you don't have those, you can't go through the banks. And I think it's possible, but then you would have to go private, maybe try to find, other investors. But with the banks, it would be very tough. They wouldn't grant you a loan without any financials that they can prove that you're able to repay that. But Lawrence, previously you've spoken about, in terms of if you want to start and you don't have finance, there's other ways you could do back-to-back deals. You could try to source and get funding, start gaining capital through different mechanisms until you're able to, maybe purchase your first property.
Yeah, I think spot on. If you're looking for traditional bank finance, it's probably not possible, but you can use private finance. You can partner with someone who's employed and use their employability to do the deal. A question, how do you find a coach? There's lots of different coaches out there. I've put my link to my coaching program, but shop around, do some Google searches. There's lots of people out there. Just find someone who's got the same strategy as you and who seems credible.
Lawrence, can I just add something on that quickly?
Yeah, sure.
I've done coaching before. I think what was different for me is that with Lawrence, with yourself, you actually hand-holded my hand in terms of my deals that I was doing. I was able to validate. Other coaches will find that they will teach you in terms of how to find the deal, but then you're on your own and the world is just too open out there, you more likely to make mistakes. So just look at that in terms of what you're looking for exactly on a coach. And then once you've identified that, you'd actually find the right coach. Because for me, I needed the person who can, put that rubber stamp to say, yes, your numbers are
Yeah.
good, you're doing the right
Yeah.
thing. Yeah.
Sure. Awesome. Okay, question here for Masego. How do you deal with electricity and water share? Um, how do you balance that? Do you pass it on to the tenants, or what strategies have you put regarding that variable expense?
Well, electricity, all my units are prepaid. We use prepaid meters. Uh, and water, I pay for the water. It's okay.
You pay for the water with electrical meters, so you can manage the electrical bill, and the water bill is relatively small, so it doesn't affect you too much.
Yeah, no, it doesn't.
Awesome. And then he's also asking what's a reasonable rental to ask. So it depends on how many students you're going to have in there. If it's NASFA's accredited, I mean, I know in the Northwest you're getting $3,000. When I looked at a deal here in Observatory, 4.5 for a
Yeah,
sharing room, 3 for a bed. So it depends on how many students are in that room. But you're looking at,
yeah,
in the Cape Town market, you're probably looking 4,000 to 6,000 for a
yeah.
sharing room.
It depends where you are, really.
Sure, sure. Okay, there's 2 more questions. Let's see here. So, how do you find people to leverage capital from? How can you find private investors? That's a tough question. Masego, do you wanna maybe talk about Sapin as an opportunity for people to leverage?
How I do it? Yeah, I'm a member of SAPIN. This is the South African Property Investors Network. Before lockdown, we used to have meetings every Thursday in Bryanston. Well, me living in Klerksdorp, I used to go just once a month, you know. And that's where you meet other property investors. You get to share ideas. You get to talk about what's going on in the market. You get to That's where I catch up with my mentor as well. So you need to belong to a certain group, and I'm sure even YouTube there's a whole lot of property groups there that you can subscribe to. I know there's SciBeep as well. There's quite a few. So you need to identify one group and just
Sure,
join them.
sure.
Like I said, your network. You need to network, basically.
Awesome. Last question for Lushiah. Where can you find fully let student accommodations? Do you find deals on Property 24?
Yeah, I think the first step obviously would be to look at your Proper 24. Once you find the deal, then obviously there will be the contacts for the agent who's facilitating that deal, and only then you'll be able to find if that student accommodation is fully let or not. Because, for an example, my first one was empty, which was a Soweto deal. It didn't have students at all. But luckily enough, with this one, it was fully let. But you can only find those details once you start chatting to whoever is facilitating that particular deal that you've identified.
Sure. Awesome. Okay. There's one question from Bakazi, I think. She wants to know if she can outsource deals to me. I'm always in the market. So is Lushiah and Masego. Please remember to put it into a professional proposal. Share with us what the returns are going to be and the exits. But you can connect with all of us on LinkedIn. I'm sure that everybody's open to a good deal if it does
Yep.
make financial sense.
Yeah.
Question regarding the areas when it comes to student accommodation. Anything within a 3 to 5K radius is what you want to be looking for. Do banks consider your current cash flow when purchasing your next property? The answer is yes. They will ask for your FICA documentation. They'll ask for annual financial statements. They'll ask for proof. But they do take your cash flow of previous properties into this. Let's see here. Final question from Tapelo. when dealing with NSFAs, is it better to get approval from the accommodation pre or post it? So what they're doing is they're building 500-bed residence. So I'm assuming that they're going to do some sort of development of new student accommodation, and they're asking the question whether it's better to get NSFAS accreditation before they start building or after they've built. I hope that's how I understand the question. I think my answer to this would be first get the accreditation, understand what the requirements are, and then make your new build or build specifically within that criteria. So if they need, I think it's 4x4 square meters for a room where you can fit maximum of 2 students, make sure you understand that criteria before you go through the development process. Guys, it is almost 7:15. I would just like to end by a few final words of advice. So I'm going to ask Masego first just to share his one last tip for you as an investor, and then I'll ask Lushiah, and then I'll end with my final tip. Please do note that this is a recorded session. If you need to drop off because of family or whatever, you're welcome to. We will have this on YouTube so you can check up later. But over to you, Dr. Masego. Thank you so much for being on the show. Your final words of advice, please.
Your network determines your net worth. Opportunity dances with those on the dance floor. So get on with it. Start investing.
You are so cheesy, but I love it. I love it. Get up, take action, and be around rich people. That's Dr. Masego's final bit of advice. Over to you, Lushiah. What are your last words of wisdom?
Yeah. So my last words is that you have to take action. It's the only way you're gonna learn. If you fail, you're gonna fail forward. You're gonna learn lessons. If you succeed, you will succeed. But most likely, you will succeed. But after only you actually take action and really be passionate about what you're doing. Invest yourself in what you're doing. I think I was chatting to you, Lawrence, the other day that I mentioned property to literally everyone that I talk to, whether it's a birthday that I'm attending, whether it's a girls' night out or whatever. They know that she's going to be talking about some house, and out of that. Out of that, I've actually got people who actually want to invest. Do you have a property? Do you want me to invest? What can I do? So I literally talk about it like everywhere I go. It's the only conversation I have. So
Awesome.
Yeah, take action. That's about it.
I think my final bit of advice is remember the why. This is not an easy game by no stretch of the imagination. You can see with Masego and with Lushiah, if you understand their stories, they've gone through a lot of hardships. They've gotten through a lot of rejections. They've asked for low offers. They've worked with investors and they've been rejected and failed several times. But what's kept them going and what's kept me going is knowing that with enough sacrifice, at some point I'll be financially free. I'll never have to work another day in my life, and I'll get to spend time with the people that really matter, my family. So remember the why to keep you motivated through the hard times. This has been a plum-pleasing pleasure and a privilege to have you guys on the call tonight. Thank you so much for being here, and enjoy the rest of your Thursday evening.
Thank you, sir.
Thanks, guys.